This podcast is for informational purposes only. It is not intended to be financial or investment advice. Seek a licensed professional for investment advice about crypto or any other investment. Welcome to the Blazing Crypto Podcast. We are Justin and Brandon, and today we are coming to you, Justin, on the other side of my Fighting Blue Devils being successful in their Sweet 16 game and their Elite 8 game. They are marching on to the Final Four in Coach K's last season. So I know this isn't a sports podcast, but you have to understand how excited I am.
Oh yes, I'm sure you're eagerly anticipating Duke versus North Carolina in the Final Four and all the excitement that comes with that.
I'll spare a lot of the details, but we were just discussing before we started recording. I grew up about 40 miles east of Raleigh, the Triangle area, and so Duke, Carolina has been basically one of the largest pieces of fabric of my existence. So it's not going to be a fun week. It's going to be a stressful week. But I would like to say also, having Bitcoin sort of take a big move over the weekend, while Duke and everything, it's been a lot to take in. But here we are, a lot of exciting times. Anything in the market you're specifically watching right now, Justin? Before we dive in.
Yeah, well, one of the things I think I texted you last night or something, I'm really watching to see how altcoins behave as Bitcoin seems to be kind of taking center stage. Everybody's watching Bitcoin, and a lot of times, Bitcoin might go up like crazy, and everything else kind of just, craps the bed. So we'll see what happens.
Yeah, there's a lot to pay attention to and watch right now, all over the place. But yeah, fun times. And even to point out, this last Bitcoin move, it was a strong move. It was not low volume. It was not sort of a weak buying scenario. There's some strong buying action happening. So yeah, I think we're looking forward to it going a little bit higher, and we'll see how high it goes. Maybe talk about that in a little bit later episode. So today we've got really an interesting topic. A lot of times we're trying to bring interesting stuff to you guys, education, learning, things that we've been able to process and just really want to make sure that everybody's sort of equipped with and on the same page about. Today, we're going to actually talk about a topic that I think Justin and I started talking about this personally just in our sort of one-on-one stuff, which we've done for 4 years now, which Justin, thanks for sticking with me and answering all my questions and hearing all my wild ideas. But anyway, that's a different discussion.
No, I like to make things up as I go. So I was learning with you. Yeah.
You were always at least a step ahead of me. So I felt like you were a lot smarter. But anyway, we one of the things we started talking about late last year was really sort of it was kind of a proposal. It was an idea. Maybe had a hypothesis. That maybe sort of the Bitcoin cycle might be over. Maybe this is the last one, and it's just a really, really big, really long one. And you and I sort of bounced that back and forth, kind of tried the idea on, tried to poke holes in it, saw where it had merit. And really, this is a pretty big deal, right? Which we'll talk about in a second, because one of our core 4 items is that we understand Bitcoin from like a long time frame perspective, and understanding what we call the 4-year cycle has been really a fundamental part of that understanding. So in this episode, we're going to talk about first, what is the 4-year cycle? Do a quick review there. Why has it been so important for the function of the Bitcoin market, but also crypto as a whole? Why has that been so foundational to our understanding? And frankly, just even the way that the larger market invests. Secondly, we're going to talk about the shifting nature of the buyer and the shifting nature of the market. And then we'll actually introduce this concept of the last cycle from a guy named Willy Woo, who's an on-chain, really, really cool on-chain analyst who's doing some really good work. And then we'll wrap up with some what-if scenarios, really to kind of say we're not really sure exactly if Willy Woo's scenario of this being the last Bitcoin cycle is going to materialize, or maybe materialize as quickly as he has proposed. But we want to kind of talk about what if he is right. And then also what if he's right, but his timing's wrong, or what if he's not right. We'll talk about that at the end. So Justin, kick us off. I set up the fact that we've historically understood Bitcoin on a 4-year cycle. explain what that is, what's driven the 4-year cycle, and then we'll get into maybe later why that's so important for our own understanding of the market.
Yeah. So I think a big reason that we've always, or at least I've always kind of centered my strategy around the 4-year cycle, or like in the context of the 4-year cycle, is it made Bitcoin a little bit more predictable. So, over the course of the last 10 years, or 12 years, I should say, Bitcoin has, gone up on these huge parabolic runs. So let's say like 20x, 30x, even 100x back in the early days. And then it was followed by this massive sell-off. You'd see a 70, 80, 90% retrace in price action. And it would go down for several years and take a long time to recover. Well, that price action fit into this, what's called the 4-year cycle. And a big reason that it kind of worked out that way was because of the way the Bitcoin halvening event works, every 4 years. So, which, by the way, we could go into like a 5 podcast episode on just the halvening cycle. So I'll try to really kind of give you a quick overview. So Bitcoin, every 4 years, the block rewards that get distributed to these Bitcoin miners gets cut in half every 4 years. So early on in Bitcoin's life cycle, the Bitcoin miners had a significant impact on the pushing of the prices upward and downward. So, on, let's say, the 10,000th whatever Bitcoin block, or the 100,000th Bitcoin block, that's when the block reward gets cut in half, and immediately all of these mining companies are now becoming less profitable, right? Because they're not getting nearly as much rewards from mining Bitcoin, but they still have all these fixed expenses. So traditionally, that happens like clockwork, and that usually has triggered a bear market. And it kind of has formed this, what we know today as the 4-year cycle. That's kind of a quick definition of like what it is. And in the middle of explaining that, I forgot actually what your second question was. You can help me out there.
You mentioned what it is. And so how you alluded to it, right? That essentially sort of the buying activity and selling activity has been oriented specifically around that halvening event. So maybe go into a little bit about why that has been so important, and how investors like you and me engage with the market, interact with the market.
Mm-hmm. Yeah. So I think the big thing for me is knowing how the market operates, and knowing that, okay, these miners, these mining companies, they're going to start selling off their Bitcoin in order to pay for these fixed costs that they have. Or storing it up, when times are more profitable. I want to sell my Bitcoin before the miners do, right? I want to be able to anticipate that, and basically sell off my assets before the miners get the opportunity to do that, because when they do, right, it sends the price just plummeting downwards. So for me, it's more about like, I don't know, it's almost like a game, right? Like, okay, who's going to sell first? And obviously, as a retail trader or investor on my angle, I'm going to want to buy again. But there's traditionally been a 70 to 80, 90% pullback, and it gives you a really good buying window to be able to accumulate a lot more Bitcoin after you've sold something that's gone up, 20 or 30x.
Exactly. So when we talk about this historically, we mean from the beginning of Bitcoin, 2009, 2010, I believe, Justin. And then, you look at cycles, obviously some really, 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 really tiny cycles early on. The main ones we're talking about, the one in 2014, the one in 2017, which again have a lot of predictability, shared characteristics, this blow off top. Significant sharp fall off, like Justin said, 80, 85, 90, 95% retracement. So just to put some numbers on it, in 2017, to refresh everybody's memory, 19,800, depending on what exchange, is the high, and we get all the way down to, I believe, somewhere around 3,200 is the low. So that's basically we're in the mid to upper 80s in terms of the percent of retracement, and so it's like, yeah, I mean, if you could overlay taking profit in the top 15% of the move upward and buy in the bottom 15 or 20% of the move downward, I mean, you're talking about a massive ability to stack Bitcoin and then sort of other assets kind of by extension. And so again, it makes sense, right? By the time everybody realizes something is predictable, what happens? It becomes less predictable because now you have people sort of counter trading what the public is sort of expecting to do.
Yeah.
I will say this just as like a kind of a sticky note on this conversation. My personal, and we're getting into the realm of speculation here. So my personal belief is that the shape of the cycle is going to continue, even if, and Justin, we've talked about this a lot, even if the four dynamic of the 4-year cycle is over. And I believe it probably is. And again, a lot of that will remain to be seen. Let's shift now to talking about this conversation of the buyer, the Bitcoin buyer changing. So to review two things that really tipped us off that something was different. In May, we had a run up that from a 4-year timing standpoint in May of 2021, and Justin, you said this, Bitcoin's just going too hot, too fast. We'd go all the way up to 64K and just fall off a cliff pretty quickly, which sort of felt normal. It was just early. And we'd go all the way down below 30K, and we basically in June and July spend, call it 8 weeks, below $36,000. Again, give or take a few $1,000. And then again in November, we climb all the way back up to 68, 69, almost 70K, and then we retrace down to 34K. This is sort of started after the sort of in mid-November, before Thanksgiving, after Thanksgiving, into December, January, and now we've recovered up to where we are. 46 or 47K at the time of this recording.
Yep.
So, Justin, that was different than what 2017 and 2018 had in store, because essentially, if 2021 would have repeated 2017. Where does Bitcoin go back down to? Again, if you were just to overlay the historicals off of, let's just say off of 70K, take the bigger number, where would we have expected to see Bitcoin fall to?
Yeah.
15, 18K?
Like a 73% decrease, which would be like right around like the 17 to 20K range.
Yeah. Basically retesting the all-time high of 2017 of, 18, 19K. Yep. And then, then again, in 3 years or in 2 years, it would start going parabolic again and go up.
Yeah.
But that hasn't happened. And there's multiple signals that things are changing. It doesn't mean things changed overnight in like a flip a switch binary way, but things are changing. My take on that is, it's a scenario where if you change who the primary buyer of Bitcoin is, and who the primary seller is as well, you change the market, right? So Justin, tell us who some of these new buyers are, and from your perspective, why that has fundamentally changed what we're seeing in terms of market, price action, et cetera.
Yeah, so there's two types of buyers that are kind of like, I would say new on the stage, like within the last several years. Countries, or I think technically I have to say country singular still, but that'll change eventually, I think. But countries are buying and companies, and obviously you also have more like billionaires and hedge funds and stuff like that as well, both buying and selling. But the main thing there is, companies like Tesla, MicroStrategy, MassMutual. These companies are buying billions of dollars of Bitcoin at a time, and they're not a mining company. Like they're not going to lose profitability at some 4-year mark, right? Like when the Bitcoin halving happens, all of their Bitcoin that they've accumulated isn't, they don't have that impact that they have from the 4-year cycle like the miners have. So not only are they, they're different, they're companies and countries, but they have different reasons that they're buying Bitcoin as well, right? They're not a mining company that's just trying to, mine it for the profitability of mining Bitcoin. So those are the two big players that are now in the space that, definitely weren't here in 2017. They were probably talking about it and planning, maybe looking at Bitcoin as as an asset to buy back then, but certainly there weren't big players like we have today.
Yeah, one thing that's really important to remember, I remember the initial hype and excitement around institutional buyers coming to the table, and it was only viewed in a positive direction. Like all these,
Yep.
We would do the big macro stats about how many trillions of dollars there were at these hedge funds and at these pension funds and in these high net worth retirement accounts, and all people could see is people buying Bitcoin. Well, if you can long the asset, you can also short the asset, which means whenever the public overreacts and institutional investors want to call their bluff, they short the asset. And we saw what happened in May where, people were over leveraged. They were borrowing too much against their assets and they got exposed. The market got shorted and all of these positions were liquidated, which causes rapid price movement in the opposite direction. And that's a lot of what's happening. It's essentially a massive tug of war battle, but now the person on the other side, and you can sort of switch sides, if you will, which just kind of messes up the analogy. But yeah, I think the point to take away from this, kind of the principle, is when you change the primary buyer, you fundamentally change the market. We should expect the market to behave differently. And it has, right? And we're adapting, we're learning. That's this is a very organic, dynamic situation. And I guess, in reality, we should expect nothing less.
Yep. Yeah.
Go ahead.
I would say the one thing that I think stands out to me, like another angle that you could take on it is, miners, let's say in 2017, I'm just going to pull this number from whatever, like let's say that miners represented 60% of the total Bitcoin market cap. I have no idea if it's 60 or 30 or 50, but let's say it was, 50%. Well, now with all of these other types of big, buyers that are coming in, well, now maybe it's like 10, 20%, right? The point is, as these new buyers have come in, miners themselves have a much smaller portion of the total market cap. And so their activity is going to provide less impact, to the overall price movement as well. So that's kind of another way to look at it.
Two stats to further demonstrate kind of a couple of other dynamics that are related to this. From an on-chain data perspective, the nature of who's the kind of person that's buying and the kind of buys that are taking place in the data that we're able to see. Two data points. So two things that get tracked is the number of wallet addresses that have over 10,000 Bitcoin, and then the number of wallet addresses that have at least 0.01 Bitcoin. Basically, the number of addresses that are over 10,000 Bitcoin is at an all-time low. And then the number of addresses with 0.01 Bitcoin or more is at an all-time high. And what that also means is we just have a lot more people into the space. The space is being the blockchain is being further decentralized, which is great, which is fantastic. And again, it's just a rapidly moving situation. And I think all of this is to the positive. It's just something we have to understand, we have to adapt to. I want to go back though. I don't want us to get lost in sort of the technical fervor of all this and sort of miss sort of the interest point for the audience though, right? Like why should they care about this? And I think, Justin, you alluded to this in the first part of the conversation. To overgeneralize, these market cycles have helped us know when to take profits and when to sort of more aggressively buy in. Maybe we're dollar cost average buying or selling all the way up or all the way down, but when do we drastically take profits and when do we drastically invest, to sort of put it in extreme terms? That's what an understanding of the market cycles has helped us with.
Yep.
Right? So it's like if a scenario happens where either A, market cycles are now unpredictable, or they're greatly muted, if they're sort of like, if what used to be a really sharp parabolic top is sort of rounded off, and what used to be an 80, 85, 90% correction is sort of rounded off to the upside, what does that do to your thinking? Not specifically, but how does that affect the thinking, Justin?
Yeah. I think, there's one angle where it's like it affects everything, right? Like, but then there's also, you could make the argument, okay, nothing has changed, right? It all just depends on your perspective and how you look at it. So like, ultimately, I want to take profits on Bitcoin when it is going straight up, like straight vertical, for like 6 weeks. And really, this whole concept of the 4-year cycle stopping or whatever, or just like no longer happening, to me, that just means, okay, there's going to be less of those opportunities, or there may not be another opportunity where it's going to go 5x in 6 weeks or whatever, But the point is, though, if I see something go parabolic, if I see Bitcoin do that, that's a time to take profits. So in that sense, nothing has changed, right? But in another sense, for the last several years, a lot of my approach to this cycle that we've kind of like been in for the last 3 years, a lot of my thoughts and my planning went into that. And I cared a lot about timing specifically. Like I even told a few people, I don't care what the price of Bitcoin is, but in the fall of 2021, I need to be selling, because all I cared about was the timing of the 4-year cycle. Now, the funny thing about that is, if I had actually followed through with that plan, I basically would have sold the top. So it just wasn't parabolic. So I think you see what I'm saying. Like, I've got this timing thing of, I want to sell in this window, the fall of 2021. And I'm also looking for a parabolic run. And the way it played out, I decided to, keep looking for the parabolic run. So I don't know. It's funny. I'm not trying to talk around the issue from 1,000 different angles, but it's comic. I think the way I look at the fall, it's like, well, a lot of things happened the way I thought they would. But the exact price, the price action of how it played out was not what I expected at all. So that's kind of,
in other words, it's like there was a trigger. There was a trigger which would have, started our thinking around selling, taking profits, moving out of the market temporarily, and the trigger never happened.
Yeah. And so and the funny thing was, I remember in like December talking to you and be like, well, crap. What do we do? Right. Just being perfectly candid, that was a conundrum that I did not expect, just say that.
Yeah. To repeat one thing there is basically to say again, we got a kind of market shape that we expected, that we're used to, but we did not get, again, the sharpness of the move up and the sharpness of a move down.
Yeah.
Which again is this is the first time that's happened, at least on kind of the bigger cycle timing points. So our position right now, the way we're viewing it, is at least this is the case, that we're really turning the volume down on the timing dynamic of the cycles.
Yeah.
We'll see how much the general shape holds or doesn't hold, but at a bare minimum, we're turning, sort of fading the number 4 kind of off the radar. In other words, we're not going to overlay the timing of the 2015 to end of 2017 market onto this next one and go, oh, okay, well, if that happened then like you said, on this date, I'm going to be buying because I know exactly what's going to happen. Yeah. The timing dynamic is sort of gone, lost. It's deprecated or whatever. Yeah. We're closing the chapter there.
Yeah, I think the main point there is like, I can be successful in my crypto, whatever you want to call it, crypto story, crypto career. Like, we can find success here just because we've lost some clarity on that timing standpoint of 4 years.
Right.
Does not mean that like, oh, let's start over from scratch and who knows what they're doing,
Yeah, that's a great sort of segue to say, I don't think our expectation of a destination has changed. It's just that, again, from a zoomed in standpoint, if you zoom out, things are largely, I think in a couple of years, like, oh yeah, of course that happened. But when we zoom in, the point is, there have been a few instances that were just like, oh, like, what is that? Like, where did that come from? We have to pay attention. We have to figure out. We have to see what's happening and navigate it. So yeah, we don't mean to cause like panic. It's just more or less, this has been a staple to our understanding of how to invest and trade in this market, and a big piece of it is shifting, right? And we kind of want to bring attention to that, and again, increase everybody's education, exposure, understanding. The last thing I'll note here on this topic is, and we've already sort of said it, but I want to say it clearly here. Normally, in every cycle, we see at least an instance, like a big instance of mass capitulation, right? Mm-hmm. To be kind of comical and cartoonish about it, it's basically when everybody says, okay, like, guys, Bitcoin was fun. It's over. It's going to zero. Like, it's happened every single time. It happened in, it happened in 2018. Yep. Bitcoin was at basically $3,000 and people were saying, okay, guys, we had our fun. It's over. Now, we weren't in that crowd, but it happens every time. And the point is, we have not seen any kind of mass capitulation. I think the lowest or the biggest corrections we got in May, June was 54, 55%. And then give me a percentage or two leash on that. And then roughly 50% from the 69 in November down to 34. So we've seen in the 50s, and normally it's 70, 80, 90. We have not seen any kind of mass capitulation. And Justin, I'm 50-50. Yeah. 50%, half of me thinks we will, and half of me thinks, maybe it's fundamentally changed forever, and we don't ever go back down to the 20K range.
So I kind of like to separate different assets. So this is where, like, my angle on that is maybe I won't see a Bitcoin capitulation, or we change the expectations that capitulation for Bitcoin used to be a 50% drop in 15 minutes, and now it's maybe a 20% drop. So I think that's going to change over time. With Bitcoin, it's going to become less volatile as that market matures. There's no denying that. But, we're still going to see, I still think we're going to see capitulation on Ethereum more so than we'll see it on Bitcoin. And as you get into some of these smaller assets like Solana, other altcoins, you're going to see capitulation events, I think, a lot more clearly. And it just might be timed with an ugly move from Bitcoin that isn't nearly as ugly as what we're used to, right? And I think that can be mirrored on the upside as well. So maybe we don't get these crazy blow-off tops, and we also don't get these deep, capitulation wicks. The last one we saw was, March 2020, the morning that everyone realized, oh, COVID is here and this is not good, and everything, just went south. So to me, I'm kind of planning as if it's not like they're going to go away. I still expect to see Bitcoin retrace aggressively. I just think it's not going to be as concentrated in these, like, the 1 hour window where it is just ugly as anything you've ever seen before. So that's kind of like my expectations for it.
Yeah, and I think, my health, mentally, physically, and everything probably will appreciate that. I think well, if you weren't in crypto the morning in May that, I mean, like legitimately, I mean, I was calling friends to check on them. Like it's something you make a movie about. Like it was one of those. It was bad.
Yep.
Anyway, so we don't have to rehearse all of that. We will not record that film right now. But yeah, I think it's a good point you make on the other coins. We will devote an entire episode to what I'm about to say right now. It's just all of our thoughts and planning hasn't solidified and cemented yet. But I guess a little bit of a teaser. This is where my mind is going, but all these thoughts have not finalized yet. Justin, we've talked before about at what point does Bitcoin, I think we've talked about it with Bitcoin and Ethereum, but at what point do they kind of decouple? Where they kind of take their own path and they do what they're going to do, and it's not really because of and in correlation to the other one. They're both going up, but not really. There's really no rhyme or reason to their correlation together, and historically there always has been. And I think that as you talk about sort of the rest of the crypto market, we're going to enter a stage, right, where Bitcoin is going to be treated more like other asset classes, like land and real estate, metals, commodities, equities. And right now we talk about crypto, and we loop Bitcoin, Ethereum, and everything in the space is, we just call it crypto.
Yeah.
But in reality, things are becoming more and more different, even though they're all blockchain, right? They're all cryptocurrency. But the point is we're going to start to see them behave more and more differently and maybe not be as tightly correlated together. And I think that's what you're trying to tee up.
Yeah.
I promise you we will do a podcast on that in the next couple of months. It's something I'm really, really interested in. It's just sort of too new and fresh right now. We haven't figured out exactly how to figure that out and can communicate it yet. But yeah, I think it's a good point. So like, yeah, with Solana, I mean, we've been talking about whether we see a $40 to $60 Solana still in this cycle. And I think it's very, very possible. I'm not going to bet on it, but I think it's very possible we do. And pick your favorite small market cap alt. Yeah, you should probably get another really good buying window. Anything there left to say, Justin?
No, you kind of like caught me before. I really want to have that podcast you talked about, and we will not have it here on the spot. But let's just say, like, I love talking about macro, like use case and Bitcoin and alts, and kind of that decoupling process is going to be fun. That's for sure.
For sure. And one thing I'll say is I got to make this comment here. Justin and I put our names on timing and price predictions, and obviously that range of outcomes just didn't happen, right? At the same time, one thing I was listening to an economist talk and a finance person and whatever, and the point is, trying to put dates on macro shifts is really foolish. The point is, I mean, if you get a macro trend right in like a 2 or 3 year window, I mean, you absolutely kill it. If you get macro right in a 5 to 10 year window, usually you do well. And that's kind of the point, right? We don't need to trace this down to a date and a time and even a week or a month or even a year. We want to know where things are trending, and that's kind of why we're doing all this. Yeah. I don't know where that comment fits in. I just felt the need to say that. And that's kind of our thought. We want to get the big ideas right and just sort of not shoot ourselves in the foot on the small stuff.
Yep.
So, all right. So I want to transition really quickly to talk about, I mentioned Willy Woo, this concept of, he calls it the last cycle. And I will say he has kind of been the front runner on this idea. Others have proposed it as well, but I want to give him credit. We're going to link, if you're interested in this topic. If you're not, I'll save you some time. But if you're interested in this topic, we'll include a link in the show notes to a podcast that 3 on-chain analysts covered. It's 2 hours long. So if you've got a drive, 100, 150, 200 mile drive ahead of you somewhere and you can stomach it, it's interesting. And The first half of it is very technical. The last half of it is very interesting, but you kind of have to put in the first hour to get the value out of the second hour. But Willy Woo is on it. There is a guy named Plan B. We don't know his real name. The fun of Web3. And then there's a 19-year-old college student at East Carolina University in Greenville, North Carolina, called Will Clemente. And they basically talk about this for about 2 hours. So I'm gonna read one of Willy Woo's tweets verbatim. This is his view in a nutshell. He unpacks it a lot more on that podcast, which we'll link for you in the show notes. So he says, the last cycle. What will be this bull cycle top? In my opinion, there is no top. In the past, and sort of asterisk, there's been a predictable walk, a predictable cycle of demand and supply that's been governed by the 4-year halvening event, which is exactly what Justin and I just sort of rolled out to you. He says, but now, so contrasted with this predictable walk, he says there's an unpredictable walk of supply and demand from a much more complex ecosystem, read people buying, selling, trading the market, which we just talked about, until we hit a point of saturation, which basically is all the Bitcoins out there. It's all been mined. It's sort of about as high as it's going to go roughly. We're not going to see 5x, 10x moves. And we'll see where that is. I'm not sure. We're not going to talk about price predictions on the final Bitcoin top today. I don't have the stomach for that. Anyway, the point is he's basically saying, in a nutshell, overgeneralizing, there is no more 80, 90% correction. And there is no more, 10x in 4 weeks. Yep. Basically, that's what he's saying. And basically, he's saying, essentially, you can't and you shouldn't, is what his view is. You shouldn't think about the 4-year, not only the 4-year cycle from a timing standpoint, but frankly, even sort of kind of give up on the shape of these big multi-year cycles of way up and then way down. Yeah. So Justin, I know that you and I have been talking about, he's had this view, actually this tweet is from October 2nd of 2021. I know he still holds this because I follow him on Twitter. But kind of, I don't know, tell me how you heard that, 5 months ago. We've talked about it half a dozen times since then. What runs through your mind as you hear these ideas and hear these thoughts?
I think my first reaction to that was, it sounds like too much change too quickly, right? Like, we're still very early on Bitcoin. I still believe that. Like, we're very early on Bitcoin. But to me, it seems like it was too much of a drastic change from the 4-year cycle being so reliable to then over here what seems like, really quickly saying, oh, it's no longer viable, just throw it out. I expect it to be more of a gradual change, I think, maybe than Willy Woo intended, or at least how he communicated it to me. So that's kind of my first gut reaction.
Yeah, one thing I will say is I've seen this in a number of different industries or sort of situations. Oftentimes, people that are really good strategists are oftentimes not the best at actually knowing from a timing standpoint of when to use that information.
Yeah.
Oftentimes, macroeconomists they're terrible traders. They have the best information in the world, and they couldn't trade themselves out of a paper bag. And that's a terrible way to use that analogy, but you know what I mean. I've got an earned PhD in mixed metaphors, and I use it at will. So, but I think, Justin, I had the same reaction, right? It's like, oh, okay, this changed all of a sudden, and now this is, forever and ever altered, never go back. I sort of have this cringe reaction of nothing will ever be the same again, right? I just, it just doesn't land right. But I think, and Justin, kind of the evolution and sort of trajectory of my own view here, where I was probably like, I 80% disagreed with him. I thought his view would eventually happen. I didn't think it was here yet.
Yeah.
Where now I'm probably 50-50 or frankly 60-40 in agreement. And I think it's just because of the fact that, I think what he's saying is the eventual circumstance. It just doesn't. It all does not fall into place at one time. So I don't know exactly what the timing of this will be, but I will say in the last 6 months we've seen enough evidence that it's at least starting to happen in ways that are noticeable, in ways that are sort of demonstrable.
Yeah.
So basically, again, we want to get this view in front of you. I don't know if I would call it the prevailing view. I think certainly within an on-chain perspective, it is starting to gain a lot of traction, and I think it has a lot of merit. So we're not really trying to say, oh, we fully disagree with him. I'm actually starting to become more in agreement with him. It was more or less like Justin said, today changes everything and everything is completely different, which he would not say, right? That's kind of how the information sort of comes across. So the point is, if to kind of stitch this episode together and land in a healthy, spot, if historically the 4-year cycle and the timing dynamic of the 4-year cycle has been what has governed our heavy investing into the market and then taking profits out of the market. If Willy Woo is spot on here and quote unquote this is the last cycle, it doesn't mean that the cycle stops. It just means that we don't have like start, stop. Massive up, massive down. He's basically saying more like small up, small down, bigger, small up, smaller, small down. You get the point. Which he would still have at 500,000 to 1 million, by the way. So we're not talking about the big numbers changing. It's just how we get there. But if he's correct, it really does change a little bit of how we buy in and how we take out.
Yep.
So Justin, to talk about what if scenarios, I think in past episodes we've probably covered what our sort of in the 4-year cycle had been. So let's talk about, let's say Willy Woo is spot on here. Let's just give him the full benefit of a doubt. How does that alter how you think about buying in and then taking profits? Sort of give us your mindset and your view on how, let's just say he's fully right. How does that change your thinking and investing?
I think the big thing for me is if Willy Woo is right, the way I'm going to play Bitcoin is going to be a lot more similar to my 401k than it is, to trading altcoins, right? And that's obviously a big spectrum there. But, I don't really hear very many podcasts. I've never heard one actually that tells people to trade their 401k and take profits and then rebuy. Like, it's just, you don't do that, right? And it's because that market has matured more. Equities, obviously you still have some sell-offs. We've seen that stuff. But as Bitcoin matures and the volatility decreases, you just get less opportunities to sell massive gains like we've talked about. So that's what I mean by it becomes more like my 401k. If something crazy happens, I'll probably take some profits. But like the money I'm putting into Bitcoin, I'm not looking to take that off the table anytime soon. Like that's just part of my investment strategy. Where I can still find ways to take profits, though, for me, is going to be on smaller assets. Like Solana, for example, I'm dollar cost averaging into Solana and some Ethereum too. These smaller assets, you're going to see the bigger ups and downs, right? The swings, the volatility. And that's still an opportunity for me to take profits. And maybe take those profits into Bitcoin. There's different strategies that you can take there. But yeah, for Bitcoin itself, I'm going to start to see that with an even longer time horizon than just 4 years.
Yeah. And I think historically, what has driven market growth into crypto, both in a consumer investor adoption like us, but also from a development adoption, people building platform infrastructure, projects, applications. It's been the fact that Bitcoin has these, 100x moves, the 50x moves, right? It gets everybody's attention. Everyone starts paying more attention. People start moving into the space, and sort of adoption breeds adoption, right? And so I think even though this whole cycle talk applies fundamentally to Bitcoin, Bitcoin has been the governor, we call it the king, right? It has, as Bitcoin goes, so the whole market goes, even though there's, little variations in between. So, I think what's interesting to me, just to kind of point it out, is maybe we've just cleared an adoption hurdle, right? We had a 9 month, 10 month alt cycle, alt season we've never seen before, right? And so that's a change, but it's a change in a pretty good direction.
Yeah.
And maybe that just means we've cleared an adoption hurdle. It's kind of like one of those points of stability, a milestone, if you will. And yeah, things are fundamentally changing, and I think we just have to acknowledge that. And they're changing very, very quickly, which is why we have such a commitment to ongoing education and learning, and not giving up on sort of just resting on what we know. Yeah, I like your thought there, Justin, about as we have opportunities to take profits, we're not blind to that. And again, for us, I'm always going to take profits in one direction, right? If it's something small, I might take it into Solana. If it's profits in Solana, it's going in Ethereum, or it's going in Bitcoin, or it's going in USD, and I'm probably never going the other way. I think your concept of the treating it more like an investment retirement account than than sort of a flip trade, I think it's spot on, and I think that's going to tie directly into seeing Bitcoin as more of land, as more like gold and silver. That, yeah, I mean, frankly, if I bought a house and 3 weeks later somebody offered me 3 times what I paid for it, it's always theirs, right? It's always theirs. I'll explain it to my wife and family. It's always theirs. But I'm not going to buy a house and in a year sell it for a 20% profit. It just doesn't make sense, right? The time investment, the emotional investment of my family, whatever. And yeah, I will say, like, if Bitcoin hit 100,000 in 6 months, it's not a prediction, just as an example. I mean, I might take some money off the table. I promised my wife a thing or two that I'm going to be on the hook for. I might have to fulfill those promises, take the family on a trip. But like, I think if in 2021, I was thinking I may pull everything out of the market, wait for the drop, and completely reinvest. And man, if you had done that, yeah, you sold the top. But if you wait, in other words, if you waited all the way until it got to 20K to rebuy, it's at 47 right now. Yeah. And the point is, it's almost like more like selling Apple stock, right? If you sold Apple stock and wanted a 30% reduction, you simply may never get it.
Yep.
Now, again, we're not saying Bitcoin will never drop 30%. It's dropped 50% twice in the last 9 months. But I think the principle of the matter is, yeah, you're taking a lot of risk if you sell Bitcoin and think I'll buy 70% lower. You're taking a lot of risk. So, Justin, any other thoughts there? I think the point is a lot of our strategy, again, the fact that we're never all in or all out on these moves, the fact that we DCA, it actually set us up really, really well for this to happen, even though, we don't know how to figure out the market, right? It's a brand new market. It's 12 years old. Some of it's only 5 years old. We're learning. Everybody's learning. But the point is our principles really did hold firm.
Yeah.
And you just have to modify what it means to trade on a longer term time horizon and how Bitcoin affects the other parts of the cycle. Justin, any parting shots for our audience before we close out this episode?
Yeah, on the whole, it's really easy. It'd be really easy in our shoes to see this 4-year cycle topic and be like, oh, something's broken, something's wrong, like this is a problem. And the reality is this needs to happen for Bitcoin to reach levels of adoption that I want it to, and that I'm like, whatever, betting on, in the sense of like I'm buying it for, a longer time horizon. So I think there's a positive and a negative way to look at it. And the positive is volatility is decreasing because we've got countries, companies, bigger money coming to the table, and that's a really good thing. That's a really good thing for the maturation of the whole crypto space. And it's really exciting, although it is this, a slightly inconvenient in that I wish we got a more clear blow off top last November.
Yeah, we just needed one more time, Bitcoin. But anyway, by the time you figure something out in life, in all of life, by the time you figure it out, it changes. So Here we are. Yeah, I think for me, it's just a reality that, in the last 3 weeks, I've heard 3 or 4, call them industry leaders, people that what they say matters, influencers in a legitimate way. People are in the public square on Twitter, in campaign speeches. People are in unsolicited ways making the use case for Bitcoin, making the use case for crypto. We said a couple months ago, blockchain is irreversible. We are not going back. So I think for me, even through all the changes and navigating all of the nuances and the differences, there's really only one path or one direction this path is going, and it's going forward. And that's, again, our continued, at the highest level, it's a commitment to blockchain. It is a commitment to Bitcoin. And again, stay tuned for that next episode coming up at some point here about, again, kind of starting to view Bitcoin even differently in a really good way, as not just being part of crypto, but actually being it itself almost like its own asset class, or thinking about it along other asset classes. So thank you guys for listening. Thanks for joining today. We'll close it there. A lot more to say. Again, if you want to hear more about this idea, if you want to hear more about sort of the on-chain perspective about the cycles, we'll link that to our episode in the show notes. But for Justin, I'm Brandon. We've got Duke, Carolina coming up on Saturday. So let's get after it, Blue Devils, and we will see you next time. Goodbye, everybody.
Go Heels.
For more information, check out our website at blazingcrypto.io. Additionally, if you have friends that are new to crypto, share our trailhead videos from our website, which is a great way to get introduced to crypto.